I think this bull market that's coming or has just started is something I've referred to the everything, everywhere, all at once bull market. It's not going to be one theme. It's $67 billion went into VC in the last cycle. There's a bunch of people building deep tech, but there's a whole group building the applications layer. So music and NFTs. I know at least 20 people, 20 groups working on that. And if I know 20, there's probably 2,000 groups or 500 groups working on that. We've got fashion, all the cultural stuff, fashion, entertainment, sports, they're all working on it. We're seeing a lot of that. That entire finance system has put its hands up and said, yeah, we're building this stuff too. Everybody's building on blockchain.
Raoul Pal, the founder of Real Vision and a seasoned macro expert, is reaffirming his belief in the imminent onset of explosive bull runs for crypto and tech assets. According to Pal, the Nasdaq, primarily composed of technology companies, exemplifies a relentless macro upward trend that consistently catches traders off guard. He identifies a secular bull trend in technology, which he refers to as the exponential age, predicting that this trend will be, in part, driven by crypto assets within the broader tech sector. Pal's analysis points to notable successes, such as Tesla, boasting a remarkable 160% increase this year, and the VanEck Semiconductor Exchange-Traded Fund, which has surged nearly 60% so far. These outcomes align with Pal's theory that tech stocks have the potential to outperform other equities. Pal contends that the digital realm is undeniably the future, emphasizing the increasing necessity for everyone to invest in technology. Furthermore, Pal speculates that a new bull market cycle has already commenced. While acknowledging the likelihood of periodic corrections, he anticipates the crypto market achieving new annual highs in the course of this cycle.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Every bull market, you need to have various 5 and 10% corrections. They're healthy. That's what needs to happen. The Nasdaq had its best start to a year almost in history. It's still up 30% after a 10% pullback. Normally, these things are very healthy to see. What we are seeing, and I can see it confusing a lot of people, is this bifurcation where the old economy, stuff like the Russell 2000, is hitting new lows because the Russell 2000 is pricing in today's economic conditions, which are pretty soggy. They're not great, right? Are we in recession? Are we not in recession? But we're there and thereabouts. Nasdaq discounted that all last year. And so Nasdaq has been on a tear, much like crypto has, because they're forward-looking assets based around a secular bull market trend. So for me, I look at the technicals, and I think there's a decent chance we put the low in equities, particularly the Nasdaq, S&P, others, today. That's my general view. We'll have to wait and see because I'm not a short-term guy, but I know where the trend is going. Don't forget election cycle years. This looks identical to the average election cycle year. You always get this correction of this magnitude. It finishes around now, and then normally it goes up into the end for both the pre-election year and just the general seasonality. So that's good. Liquidity, even though it feels like liquidity is coming out of the market, if I look at the Fed net liquidity, it's actually been rising slightly, slowly, but rising. So we're not seeing a liquidity draw from markets. We're seeing China stimulating. So that's global liquidity coming. I think any day now, the Japanese will come in and intervene in the currency market and or the bond market. That'll be stimulus. The Europeans were out today or yesterday saying they're done with rate rises, most likely. Okay, so that changes the liquidity environment. It doesn't yet make it positive, but it makes it less negative. The US looks like it's done as well. We've seen several of the Fed members saying, we're done, let's wait and see. So on balance, things are more positive. So if technology is forward-looking, then you would need to ask yourself, as Stan Druckenmiller said, he said, you need to ask yourself what are economic conditions going to be in 6 months or 12 months' time? Are rates going to be this high or lower? Is liquidity going to be here or higher? The idea that the world is going ever more digital, the software is eating the world idea that Mark Andreessen said, is so bloody obvious at this point. I mean, here we, 3 of us are in 3 different countries. 5 years ago, Maggie, we'd have had to have a satellite link to do this with television crews. If not, we'd have to fly everybody to a studio in New York. Right? All of this is just a manifestation of where the metaverse is going. It's the digitization of our lives. That doesn't mean we don't enjoy the beach here in the Cayman Islands that we all, just live with headsets on. But it means that the digital world, I'm sitting around me and I've got Bloomberg screens, other screens, all of this stuff. That's just a noisy mess. Sooner or later, it just becomes 3D immersive abilities, whether it's with or without headset. I mean, hologram comes after headset, and before you know it, everything digital and physical merges. We're all seeing that everywhere. And like it or not, those people who say, well, I think this metaverse is a bunch of bullshit, go and see what your kids are doing all day. And if they're not in the metaverse, that would be a huge surprise to me. So it is coming. It's coming to our office environments. We now work from home. Why? Because of the metaverse. Right? Everything is digital. We used to have physical mail. Now we have digital mail. We used to have film with actual film, and now we just stream it digitally. We used to have to dial up somebody on a phone, and now we have these mobile phones that last everywhere. I'm here in Little Cayman, and why this image is good now, because now I'm on Starlink. I get 100 meg or 200 meg up and down in the middle of the Caribbean Sea. All of the digital world is coming at us so fast, and that is the metaverse. It just is the meeting point. It's the end game.
After two of the world's most valuable tech companies reported results that exceeded expectations on both the top and bottom lines, the Nasdaq experienced a 3% drop over a 2-day period. With Amazon's third-quarter report scheduled after Thursday's close and Apple set to announce next week, tech investors are demonstrating reduced interest in past performance and are more focused on anticipated developments as the year concludes. Raoul Pal adds his perspective on macro concerns, particularly highlighting ETFs as an overhyped factor. He emphasizes that ETFs alone cannot trigger a sudden surge of liquidity into the market. Instead, Pal introduces a more decisive factor, which he elaborates on in the video below. Let's now listen to Raoul Pal.
For me, there's a few people that come from my old macro world that speak new world. Dan Tapiero in crypto, Dan Moorhead in crypto. Geordie is exponential age plus crypto. He's just a profoundly deep thinker, and it's just really enjoyable to talk to him. And his thesis is, which is actually parallels my thesis, is this is a digital nation state of crypto made up of sub-nations, and that the returns are superior and that it's going to eat jobs from the major economy because the opportunities are larger because the asymmetricness of the space. He's also like, the return profile is so ridiculously prolific, even with the up and down cycles, that even with rates at 5%, and he thinks they stay at 5%. We had a discussion around that. He said that the issue is capital looks at that 5%, turns its head, looks at the S&P up 8%. It's like, well, I was quite happy not to take the risk. You look at Bitcoin up 100% or Solana up 220%. And surely enough, money will leak into risk-taking. And it's something him and I talked about is the ETF. How I think of the ETF, how people should use it in their mental model is if the digital nation state of crypto, new world, and TradFi, old world, what the ETF is nothing more than a trade agreement between these two countries. And the trade agreement, once it's put in place, doesn't necessarily mean the money comes in. It's the TradFi guys need to look at crypto, go, there's higher rates of return. And right now that's proving itself. So the probability over time of foreign direct investment, FDI, coming from TradFi world into new world is very high. And then they will add a second trade agreement, which will be the ETH spot ETF. So if you think of these as trade agreements between these digital worlds, it gets very interesting. And that's what Geordie also talked about was the competition for talent from two different countries. Old world and new world. It's very hard for TradFi to hire the best people anymore because they'd rather go to crypto. Why? Because they get paid more and the upside opportunities more. It's why AI is sucking in all the jobs and AT&T can't hire them. It's a really different world we're going into, and this new world that I've always called the massive black hole just continues. I mean, we've got 425 million active wallets now. By the time this bull market finishes in, let's say, 2026, there'll be 1 billion people using it. That's a country the size of China. They're just digital countries, digital nation states. that has allocation of resources, taxation, which is fees for using the protocol. You even have kind of security costs, which is the same as military costs. You have a finance system, which will be DeFi. You have an asset system like NFTs and other assets. You've got, it's when you look at it, when you just get rid of all the terminology, it's a borderless state with its own currency. And it's a bloody big one.
The recent surge in Bitcoin prices is underpinned by optimistic expectations that the U.S. Securities and Exchange Commission will reverse its long-standing refusal to approve a spot ETF, a stock market fund holding Bitcoins. Major players in the financial world, including BlackRock and Franklin Templeton, are among those submitting filings to the SEC, signaling a growing interest in crypto investments. The approval of a spot Bitcoin ETF by the SEC is seen as a pivotal move that would validate Bitcoin as a recognized asset class alongside traditional investments, according to Ilan Salat, co-head of digital assets at Merck. While crypto advocates argue that such ETFs offer a cost-effective and secure method for consumers to trade tokens, the SEC remains concerned about the potential for market manipulation. Notably, a Washington court ruled against the SEC's rejection of Grayscale's application to convert its flagship Grayscale Bitcoin Trust into an ETF, putting additional pressure on the regulatory body. Traders are anticipating a surge in Bitcoin prices if an ETF is approved, as evidenced by an over 8% price increase earlier this month spurred by false rumors on social media about BlackRock's application approval. Despite this, recent investment flows into digital asset funds, totaling $179 million over the past 4 weeks, suggest a more cautious approach from investors compared to previous filings. The SEC is set to make its initial rulings on these ETF filings at the beginning of next year, leaving the crypto community eagerly awaiting the regulatory decision and questioning whether the current market trend signifies a sustained bull run. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.